Hey traders, are you searching for a reliable tool to navigate the complexities of the Forex market and enhance your trading strategy? Then look no further than the Trigger Zones indicator for MetaTrader 4. This innovative indicator is designed to revolutionize your trading experience by providing clear signals and invaluable insights into market trends. The indicator provides the ability to effortlessly identify optimal entry and exit points based on the color changes of the trigger zones indicator. When the indicator turns purple, indicating a sell zone, you'll know it's time to consider shorting opportunities. Conversely, when the indicator turns blue, signaling a buy zone, you'll be primed to seize opportunities for long trades. It's that straightforward. The trigger zone indicator is definitely worth a closer look, but before we begin, I want to ask you for a quick favor and show your support for the video by hitting that like button. Also subscribe to stay up to date with our future videos. Let's start with a trading example. For this example, I've selected the euro against the US dollar in the 4-hour time frame. And before we dive into the specifics of the trigger zones indicator, it's essential to grasp the fundamental characteristics of the Forex market. Unlike other financial markets such as stocks and commodities, the Forex market is driven primarily by large macroeconomic events and forces. This inherent nature of the Forex market gives rise to clean and discernible trends, making it an ideal environment for trend-following strategies. With this in mind, our team focused on a long-term trading approach that has stood the test of time. Now, from the chart, we can see that the indicator has recently turned from blue to purple, signaling a clear shift in momentum. Additionally, we can see that we are currently range-bound after the large bearish move. Now, once the candle has closed, I will enter my sell trade. And for the sell trade, I will place my stop loss above the recent swing and aim for double the return. Alternatively, you can hold the trade until the indicators switch back to blue or use a trailing stop to maximize your profit. So whether you're a seasoned trader seeking to refine your strategy or a novice looking for a reliable ally in the Forex market, the Trigger Zones indicator for MetaTrader 4 is your ultimate solution. Next, let's explore the opposite side of the spectrum by looking at a buy trade and what sets the indicator apart from the rest. For this example, I've selected the US dollar against the Japanese yen in the 4-hour time frame. The thing that sets the trigger zones indicator apart from the rest is the fact that it's grounded in a deep understanding of the fundamental nature of currency markets. By capitalizing on the inherent trendiness of forex pairs and focusing on longer time frames, this indicator helps you filter out noise and hone in on the most significant market movements. As you know, in today's dynamic forex landscape, where macroeconomic events and forces drive behaviors, having a tool like the Trigger Zones indicator is indispensable. It empowers you to ride the waves of market trends with confidence, maximizing your potential for success and profitability. Now, what we can see from the chart is that the pair was trending down, offering multiple sell opportunities for those traders that already owned our indicator. Then price action approached this demand zone, and we see a double bottom rejection with price action crossing over our indicator. Now, once the trigger zones have switched from purple to blue, we can enter our buy trade. For the buy trade, I will place my stop loss a couple of points below the recent market swing and aim for double the return. For this example, my stop loss will be set at 140 pips and my take target at 280 pips. As we can see from these two examples, with the indicator by your side, you can say goodbye to guesswork and hello to a strategic edge in your trading journey. Experience the power of the Trigger Zones indicator and you'll unlock another level of trading. Next, let's explore another example and look at how the trigger zones eliminate market noise and randomness. For this example, I've selected the Australian dollar against the US dollar in the 4-hour time frame. Now, one of the main challenges that face traders in the forex market is distinguishing between meaningful price movements and random noise. The trigger zone indicator addresses this challenge by focusing on longer time frames, where randomness decreases and trends become clearer and also more reliable. This allows traders to filter out noise and concentrate on following the main trend. This maximizes their profits in the trading process. Now on the 4-hour time frame, we can see that the pair is currently trending below the trigger zones, which is colored purple, meaning we should only be looking for sell trades. Then switching to the hourly time frame, knowing that we should only be looking for sells, we only need to wait for the ribbon to turn purple before entering our sell trade. Now, once the candle has closed, we can enter our trade. And for the sell trade, I will place my stop loss above the recent market swing and aim for double the return. For this example, my stop loss will be placed at 55 pips and my take target will be set at 110 pips. Alternatively, once the trade is running in a profit, you can trail your stop loss using the trigger zones indicator. Next, let's explore a swing trade example focusing on the daily chart. For this example, I've selected the US dollar against the Canadian dollar in the daily time frame. And for this example, you'll notice that price action has crossed above the trigger zone and it's colored blue, meaning we should only be looking for buy trades. Now, if you might have missed the initial switch, we can always enter the uptrend during a pullback. This maximizes our gains from the initial uptrend. To do this, we are waiting for a pullback like this, followed by bullish price action. Now, from the chart, we can see the strong rejection from price action, meaning we can enter our buy trade. For the buy trade, I will place my stop loss below the recent swing at 100 pips and aim for double the return at 200 pips. The trigger zone indicator is specifically designed to capitalize on the trendiness of forex markets. By analyzing price movements across different time frames, ranging from the 4-hour to daily and weekly charts, the indicator identifies key zones where trends are likely to develop or reverse. This enables traders to enter positions with confidence, knowing that they are aligned with the prevailing market sentiment. Next, let's explore another swing trade example. However, before moving forward, if you found this video helpful, please drop it a quick like. Thanks. For our next example, I've selected the British pound against the US dollar in the daily time frame. From the chart, we can observe that price action has just crossed the trigger zones, which changes color from blue to purple. Additionally, we can see that price action is now closing below, which has caused the color change. Now, once the candle has closed, confirming that we have switched to bearish, we can enter our sell trade. For the sell trade, I will place my stop loss above the recent market swing at 130 pips and aim for double the return. Alternatively, you can trail your stop loss using the trigger zones indicator if you want to stay in the trade for longer. Next, let's explore our last trade example. For this, I've selected the US dollar against the Swiss franc in the 4-hour time frame. From the 4-hour time frame, we can observe a strong rejection away from a demand zone with a double bottom rejection candlestick pattern. After this, price action crossed the trigger zones and changed from purple to blue. This means we should only be looking for buy trades. Additionally, we see from price action forming a small pullback towards the line, which is a great place to enter. Now for the stop loss, I will place it a couple of points below the recent market swing and aim for double the return. For this specific example, my stop loss will be set at 70 pips and my take target at 140. In conclusion, the trigger zones indicator for MT4 is a game changer for traders looking to enhance their trading strategies and achieve consistent success in the Forex market. By leveraging the indicator's ability to identify market trends and eliminate noise and randomness, traders can gain strategic advantage and unlock new levels of profitability. So whether you're a seasoned trader or novice, the trigger zones indicator is your key to navigating the complexities of the Forex market. So if you're interested in finding out more about the trigger zones indicator, we invite you to visit our website. I would recommend that you check out our Indicator Vault Premium membership. With the Premium membership, you'll gain access to the trigger zone indicator plus multiple other next generation indicators. I hope that you found this video helpful and best of luck with all your future trading. Happy trading. Bye.